Good morning or good afternoon, depending upon where you are in the world, and welcome to the next video, which isn't really a market update or anything like that. This is to accompany a guide I wrote, and the guide is on life insurance and a little bit of critical illness cover. So, or broadly, we can call it protection, a part of the protection piece of financial planning. So why do I want to talk about this? Well, it's essentially something that most people in the world, if they're of working age anyway, are going to want or need. And I find it quite amusing because lots of people buy it, lots of people go out there and just get online, find a quote and pick the cheapest one. And that's fine, but if we think about financial planning and how it all works, then I'm sure you can see that actually if it's done properly, it should be a part of the more holistic piece, and therefore getting advice on it is probably the right way to go. Key point to note is that doesn't make it more expensive. It doesn't make it more expensive if you get advice on it. So you're not saving money by skipping that process. All you're doing by going through that process is actually making sure that you get the right amount for you, which could in fact reduce your costs. And I'll sort of go on to why. So what we're going to look at is I'm going to give you just 7 tips as to what you should look for and what you can do when you are considering life insurance. Okay, so the first one is, number 1, don't guess the amount of cover you need. I meet expatriates all the time who have $500,000 or $1 million of life insurance and then believe that they are covered. And they definitely have something which is better than having nothing. But it doesn't really mean anything, does it? It's an arbitrary figure that they just plucked out the air and actually has no basis within planning. It is somebody has come and sold you a product. They haven't actually explained how it fits as part of your wider financial planning. If you had a car worth 78,000 dirhams or dollars or whatever it is, you would insure it for the exact amount that it was worth. Insurance on your life is to cover liabilities if you died. If you hadn't made it home last night, what would the financial impact have been today? And you can very easily calculate what those liabilities are. Cost of raising children, university, paying off mortgages, etc, 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 etc. And if you go for a proper financial planning process, they should fall out. You will then also have assets, and then you can simply deduct one figure from the other to figure out what your life insurance gap is. I will be more than happy to show you how to do this. Unsurprisingly, it is rarely going to be a round number. Why on earth would it be? It's never going to round up to 100. It doesn't work that way. So when you go through that process properly, the figure will not be a guess. The next point on that don't guess element is that if the worst were to actually happen to you, which let's hope it doesn't, but if it did, at least your spouse or beneficiaries or whoever you leave behind, have an actual record of what the liabilities were and what the life insurance payout is for. That is a stress reliever. If the beneficiary inherits the money and knows exactly what they're supposed to do with it, when and why, that is a stress reliever, rather than just having a boatload of money that now they need to figure out what to do with. Okay. Now, point number 2, common misconception, it's not health insurance or medical insurance, okay? As expatriates, that is really common, well, not just common, most of us have medical or health insurance. These are not the same. Medical insurance is there, if you break your leg, you go down to the hospital and the medical insurance will hopefully pay for the cast or x-rays or whatever it is you have to have done. Life insurance or critical illness cover is not that. The two are quite different. Number 3, consider tax. Okay, so if you're British, like I am, and you're still domiciled in the UK, then you're still subject to UK inheritance taxation, even if you don't live there anymore, because it's taxed on your global estate. If my life insurance pays out into that estate and I'm worth enough money, then the life insurance that pays out would become taxable, which is completely and utterly useless, isn't it? It sort of defies the point of having it. So what you can generally do is use simple trust structures, which are normally free, and ensure that there's no tax to pay on that payout. Again, really common to meet loads of people with life insurance who have not considered that aspect of it, and generally it's a free, cheap, not just cheap, free fix. So definitely something to look at. Number 4, don't forget critical illness cover. for a lot of people that I meet, actually, that's almost more important than the life insurance in many cases. So your ability to go to work every day and earn money for a lot of people is the biggest asset they have, because it is that is going to fund, paying down mortgages, saving for your retirement, paying school fees, whatever. So as an asset, your ability to earn money is important. If you were to get sick, obviously the common one that is cancer, then generally you're ill for 6 to 9 months, go through chemotherapy, radiotherapy, and then go back to work, hopefully. So if somebody was to give you roughly a year's salary up front at the start of that year, then your financial planning does not need to be impacted in any way. Of course, if you're very unfortunate, you could be critically ill for longer than a year, and therefore my general guidance, this is not generic, but most of the time I say that you should have roughly 1 year to 2 years salary as insurance against critical illness. I generally don't advise people have more than that, because the chances of you being critically ill for longer than that are actually quite low. I know it can happen, but statistically the chances are not high. Point 5, consider the provider. There's no point in having a life insurance policy that doesn't pay out because you bought it from dodgy company somewhere. Use a well-known, well-regarded provider who you can be confident is going to pay. Number 6, consider the options. It doesn't just have to be level term insurance. There's decreasing, there's level, there's even whole of life, which can have its uses at times. But again, go through that financial planning process and actually consider what the options are. Your advisor should be showing you what the options are, what the benefits of each of them are, and guiding you as to which one is more appropriate. Of course, a decreasing policy is going to be cheaper than a level policy, which can be a consideration. And then finally, consider the term. You select the term at the outset, either 5, 10, 15, 20, 25 years, whatever it is. Again, a common thing that I do see over here is, insure yourself for the longest amount of time possible, i.e. until you're nearly 80, because then the chances of you claiming on it are higher. In my head, that makes no sense. I understand where people are coming from, but as I said earlier, insurance is to cover against liabilities. Once I've retired and cleared my mortgage and my kids have gone and I've saved during my working life to build a pension pot or whatever it is, if I died, the financial impact upon my beneficiaries would probably be zero, because it's all paid for. So do I need the insurance anymore? Why would I fork out for that every month? I probably don't. And the reality is, at the outset, if you pick a longer term, then it's going to be more expensive. So again, it should be part of a holistic process that is planned and actually time-phased, just like if you were planning anything else, whether it was a military operation or a project at work or whatever it is. It all needs to fit together and align. So they're my tips for getting life insurance right. I hope that was useful. When I was looking on Google and around the wider internet, I couldn't really find anything that sort of laid that out. So yeah, I do hope that was useful. Please do like, share, send it to your friends. We all need it, I guess, as expatriates, we're all looking for it. So yeah, take care.